Hello and welcome to Nordic Case. On this channel I discuss different stocks. I give deep dives into their histories, what they do, risk and potential. This is not investment advice and I encourage you to do your own research into the companies before deciding whether to invest in it or not. This is for educational purposes and I am not a financial advisor. Today we'll be discussing VEF, an investment company in emerging markets. VEF, formerly known as Vostok Emerging Finance, was created in 2015 after being spun off by V&V. Today it sits at a market cap of $72 million and is listed on the Nasdaq Stockholm. VEF invests in emerging market fintech companies. Fintech is short for financial technology. The fintech sector has grown by 12% the last 5 years and is projected to grow another 16.5% per year in the coming 5 years. Since 2015, the net asset value per share has grown by 11%. VEF operates on what they call a mark-to-model valuation. This is because they primarily own private companies and therefore can't put a precise value on their portfolio. Of the part of the portfolio that is public, they use the price of the companies on the market. However, on the companies that are private, they look at the last 12 months. If there has been any purchases during those 12 months, they will use the valuation used for those purchases. If there hasn't been a purchase within the last 12 months, they will instead look at similar companies and their multiples to assign their companies similar multiples based on growth and profitability and a wide array of other factors. VEF has a very concentrated portfolio with its top 3 holdings making up 78% of it. The top 3 holdings are Creditas, which is 37% of the portfolio, JustPay, which is 22%, and Konfio, which is 19%. The reason for why VEF's portfolio is so concentrated is because they invest in a relatively early stadium of growth for the companies. This means that it can be quite hard to find the best companies, and even though they try their best, it might not always go their way. But when it does, this can mean serious business, and I will get back to that later. So when they finally find one of these companies, or a few of these companies, they just want to put as much capital as possible into these few companies that are actually going well to try to make as big of a profit as possible in those companies or with those companies. The reason why they go into emerging markets is because it's a lot easier to get investment opportunities. There's not too much competition between investment firms, at least on the slightly smaller scale that VEF invests in. There's also a lot less competition between companies, which means that if you finally found a company, there's a lot lower of a chance that their moat is going to be broken. These countries also, at least compared to the West, is growing a lot faster, both population-wise and GDP-wise, with a 4% growth of GDP in Brazil, 7.5% GDP growth in India, and 2% in Mexico. This helps accelerate the growth exponentially and also gives them a lot bigger of a market to take over. They primarily focus on stable democratic countries where the rule of law is strong in an emerging market context. Creditas, which the biggest company, makes up 37% of its portfolio. Creditas is a Brazilian bank that gives out asset-backed loans. While this is very normal here in the West, in Brazil, before Creditas, this was very, very uncommon, and thus leading to very high interest rates, sometimes over 100% to get a loan. With these loans, or with these asset-backed loans, Creditas has been able to undercut the other banks in Brazil that have been unwilling to lower their rents to compete. In 2023, Creditas became profitable. This, however, was at the expense of growth. However, in their last report, we have been seeing an re-accelerating growth while staying profitable. They have set up a 25% growth target per year going forward, potentially not including 2015. Creditas has been the talk of having an IPO for a while and has been aiming for 2015. However, this is not for certain and could depend on market conditions. However, if the IPO valuation is in line with VEF's mark-to-model valuation, this could send VEF's share price skyrocketing by proving its mark-to-model valuation correct. VEF's stake in Creditas is worth $145 million compared to its investments valued at $108 million. This gives a gain of 34%. This is, however, after VEF's Q4 report, where they took down the value of Creditas by 42% due to currency headwinds and peer multiples going down as well. VEF's second largest company is JustPay, making up 22% of its portfolio. JustPay is India's leading payment technology company, and in 2024 it processed about 150 billion US dollars in transactions. VEF's stake in JustPay is estimated to be worth 84 million US dollars. However, they only invested 21 million US dollars, making this a gain of 400%. In Q4, JustPay appreciated 7% despite peer multiples going down and currency headwinds. According to Newsbite, JustPay could also become 2025's first unicorn. A unicorn is a company in an emerging market that reaches $1 billion in valuation. Konfío, VEF's third largest company, makes up 19% of its portfolio. Konfío does banking for medium-sized businesses in Mexico. This has previously been a very poorly banked segment in the business ecosystem. VEF's stake in Konfío is valued at 72.8 million US dollars compared to its investment of 56.5 million US dollars. This represents a 29% gain. Konfío is also working on its Mexican banking license. This would provide it with huge opportunities for growth and also potentially giving it the option to expand internationally. VEF has a share price of 0.15 US dollars compared to its book value of 0.34 US dollars per share. This is equivalent to a 53% discount when comparing the share price and its book value. This is because the market simply doesn't trust this mark-to-model based valuations. This could mean that if its mark-to-model based valuations are proven correct, it's discounted at 53%, meaning it should 2x. However, the market could also be right, and VEF could even deserve a higher discount than it already has, which is a big risk with it. However, in the recent exits, such as BlackBuck, the mark-to-model valuation has been relatively accurate within just a few percent of the IPO value or the exit value in the M&A. I would like to add, while BlackBuck's IPO came in at about 3-4% below its estimated value, it has since gone up by over 55%. VEF is also a very volatile stock, so you should be prepared to hold it for a little while and not panic sell it. You should also not need the money within at least a relatively long time span from when you invested it, just to make sure that you're not just selling off your position in a small downturn that will then reverse within 2-3 months. This also makes VEF a great company to attempt to swing trade, since it has, at least over the last few years, a tendency of going between 0.5 US dollars and 0.2 US dollars. Sometimes it has also gone up to 0.25 US dollars, but then always fallen back to 0.2. And if you can time those patterns, you can also make a lot of money through swing trading. One of the major reasons that Creditas were depreciated 43% in the last quarter was mentioned to be the currency the value of the Brazilian currency. The Brazilian currency had at that point fallen about 20-25%, but has since then already recovered 6.5%. The peers that Creditas has also been compared to in the mark-to-model valuation, such as Meli, NU, XP, and Blanco, are also up 13% year to date, meaning that according to the model valuation, the stock should be up about 20% since Q4. VEF also has multiple catalysts, such as the talked about Creditas IPO and Konfio's banking license. Any potential exits and M&As and other IPOs could also be a catalyst for VEF. Thank you so much for watching this episode of Nordic Case. Please like and subscribe if you like the content and want to see more. If you have any questions or anything else, leave it in the comments and I'll do my best to answer it. I do, however, want to disclose that I have a long-term position in this company and I have been swing trading it. Thank you all very much, and I'll see you next time.